Is serviced accommodation the ultimate money printer in 2026, or is that window closing? With the Renters' Rights Act coming into play on May the 1st, a lot of landlords of older properties are panicking. They don't want properties with tenants in them who aren't paying on a regular basis, who they can't kick out of their properties. But the smart money is doubling down. Today, we'll look at serviced accommodation and whether that could be an option for you to consider, or whether long-term buy-to-lets is still the way to go for you. If you're new here, welcome. My name's James. I'm the co-founder and managing director of a property investment consultancy called Freighter Property Partners, but this channel is all about your education. If you like the video, don't forget to hit the like button and subscribe to the channel, but let's get into it. So why are lots of people suddenly considering serviced accommodation or short-term lets in the current market? The main reason is control. With the Renters' Rights Act that's coming in, that control that landlords have currently is being taken away from them bit by bit. This means that a lot of landlords who have properties are suddenly worried that they might have tenants that don't pay that they can't kick out. Obviously, the vast majority of tenants are very good. They pay on time, they don't cause stress, and you can be confident that they're going to look after the property. However, for many landlords, the prospect of an open-ended tenancy where they can't kick out problem tenants is actually really scary. So they're looking at serviced accommodation as a way that they can keep control of their property and continue to get a decent rental income and long-term capital growth. On paper, when you look at serviced accommodation, it looks like a bit of a no-brainer. You've got a better income than what you would do as a buy-to-let. You'll still get the capital appreciation on the assets that you're purchasing, and you get back that control that you're losing with the Renters' Rights Act. Having said that, it's not as straightforward as just that. So today we'll look at the pros and cons of serviced accommodation in 2026 and whether it could be part of your portfolio moving forward. So first and foremost, what are the pros of serviced accommodation or short-term lets? The first is already what we've touched on, it's control. And this hasn't been a pro of serviced accommodation in the past, but with the Renters' Rights Act coming in, it's going to be something that landlords, especially landlords with older properties, are looking at in more and more detail. The second is your yields are likely to be better if you buy a good quality serviced accommodation and it's in the right location. In the modern day, a good quality buy-to-let might earn you £350 to £450 a month profit every single month. With serviced accommodation, if it's in the right location and it's run properly, you could get £1,000 or £2,000 a month profit after you've paid for all of your costs. Your property can be cleaned and inspected once a week rather than once every 6 months, so you can have a better vision or better insight into what's going on and what needs work on your property. And finally, if you buy in the right location with an area that is in high demand, you'll still get the same capital growth as you would do with a normal buy-to-let, as long as it's a normal property that could be used for residential purposes moving forward, like a city centre apartment. So on the face of it, this all looks really positive. Get a really strong yield in the short term, benefit from the growth and keep control. But why should you be aware or maybe concerned of serviced accommodation on the whole? The first is market saturation. If you've had this idea and I'm doing a video on it, you can be pretty sure that lots of other people have had the same idea as you. So more and more properties are coming onto the market and being run as serviced accommodation. That market saturation means that somewhere you might have an occupancy of 70 to 80% previously might only be at 50%. The thing you've got to look at with this as well is when you've got these properties run as serviced accommodation, your costs are going to be higher. So you're going to have to pay for things like your council tax and your bills to maintain that property and make sure it's still popular moving forward. This means that if you don't get the occupancy you're expecting, or your occupancy is particularly low, you could be losing money every single month. The second con you definitely need to be aware of is the rising costs. When you own a serviced apartment or short-term let, you'll have to pay for the utility costs. As these are increasing month on month, that's your cost increasing. So again, if you marry this with a lower occupancy rate, or if your Airbnb isn't particularly popular for one reason or another, you could be losing money where your money would be better suited just stuck in a normal buy-to-let property. The third con is obviously you're going to be taking on more risk with a short-term let than you would do as a buy-to-let. When you rent out a buy-to-let, there could be professionals or a family in that property for 2, 3, even 5 years, where they usually look at these properties like they're their own homes, especially if you're buying good quality buy-to-lets. When you're renting the property out on a night-by-night basis or a week-by-week basis, you have more and more people in that property. There's more options for people to maybe not treat the property the way you'd like it to be treated and potentially break things. So if this is a strategy you are considering, you need to be aware of the risk of things potentially being broken and the cost associated with that. And then the final thing you need to be aware of is the management costs. If you're not going to manage the property yourself, which you probably shouldn't in the modern day, the property is going to be managed by a specialist agent who will charge anywhere from 15 to 20% management plus VAT. So that's going to eat into your income every single month, and again, it's something else you need to be aware of. So the numbers can be quite difficult in the modern day. The way you need to view this is it's not particularly property investment in the traditional sense. You need to view this as a hospitality business. You need to make sure that whoever you appoint to manage the property has great communication, manages that in a way that looks after each and every guest that you have, and make sure that communication is super high with you as well. So with all of this said, what should you do in 2026? Well, there's two different things you can look at. If you already own property in 2026 and you're worried about the older properties that you own, now is the time to start upgrading them into better quality assets. The way to look at it is to stop thinking like a property investor and start looking as if you're playing a game of Monopoly. You need to get rid of the old Kent Road type properties that have low EPC ratings, have lots of maintenance and potentially lots of issues with tenants, and you need to make sure that you're purchasing good quality assets in areas prime for long-term growth, where you're going to make sure that the tenants look after the properties long-term. These good quality assets are going to have less maintenance issues. If you go direct to a developer, you're going to have a 10-year build warranty that again protects your investment longer term, and you're going to make sure that you're getting into assets that hopefully will stand the test of time. If you're looking at purchasing in the next 12 months, a short-term let or a quality buy-to-let could be the way to go for you. Ultimately, buy-to-lets and long-term property investment strategies are where you build your wealth within property. The short-term stuff isn't that important in my opinion. If you are looking at buying a serviced apartment or serviced accommodation in the current market, location is everything. There's no point buying a property and predicting a 10% or a 12% yield in an area that no one goes to for any reason. You need prime city centre stock. You need to make sure that they're employment hubs where businesses might have their staff stay up for a week at a time. Also, new infrastructure projects where you might have workmen coming and staying in a location for a week at a time. Things like HS2 or big transformations across different cities. Again, locations to consider. You're looking at places like Manchester where there's big regeneration, that you can make sure that there is a demand there long term. You could be close to airports where people are looking to stay while they're travelling or before or after they travel, and more things like that. However, before you go and just buy a property in one of these locations and try and rent it out as a serviced apartment, the main thing when you're looking at prime city centre apartments is that you're not in breach of the lease. A lot of new leases, especially city centre prime locations, restrict short-term lets. So if you're going to buy a property and you want to rent it out on a night-by-night basis, you need to make sure that they're allowed, or if you're not sure, that you speak to the freeholder and you make sure that you've got permission to rent it out on this basis. So to conclude, serviced accommodation is an opportunity in 2026. However, you shouldn't just flip your properties to serviced apartments and try and rent them out on a night-by-night basis, because with higher competition, you're unlikely to make a success of it. Buy-to-let is always going to be the place where you build your wealth in the long term, and you never know if something changes in the next few years in terms of legislation around short-term lets. You could be stuck with a property you can't rent out as a buy-to-let. So if you are looking at this strategy, you also need to make sure that it stacks up from a buy-to-let perspective if there's a change in legislation. Don't just abandon buy-to-lets. Make sure that you're aware of all of the risk and you're growing your wealth in the long term through property. Serviced accommodation can play a part of that, but it shouldn't be your overall portfolio. And finally, make sure you're making the right decision for you and your overall property portfolio. If you have old and tired properties that need lots of maintenance, maybe it's time to sell them and upgrade them for better quality assets like you would in Monopoly. This new regulation isn't the end of property investment in the UK, it's just making way for a more professional property investor. And if you're looking for support to buy your next buy-to-let or serviced accommodation, I'll put a link to our website, Freighter Property Partners, in the description, and you can have a free chat with one of the team to see if it's worthwhile you looking at that. But thanks again for watching. I hope it's been useful, and I'll see you soon.